Want to come back to that ECB story and figure out exactly what is happening here. The ECB, the central bank, is working on a crisis tool to deploy in the event of a blowout in bond yields, particularly in weaker Eurozone economies. Think BTPs, think Italy here. According to officials familiar with the plans, the scheme is yet not fully thought out yet, but they are certainly working on it. Bloomberg's Jana Randow broke the story. Jana, can you walk us through what this could look like, what the trigger could be, and what the objective ultimately would be in terms of managing spreads?
Yeah, so what you have to have in mind that ever since the start of 2015, the ECB has, with a short interruption in 2019, persistently been in the market with large-scale asset purchases, and that time is now coming to an end. And it's coming to an end at a time of very high uncertainty because of the war in Ukraine. So policymakers are reasonably concerned that spreads will blow out, and that countries, particularly in the south, where sovereign debts are very high and have become higher because of spending during the pandemic, are going to be a focus of investors again. And because of those concerns, there is work underway in the ECB, as we understand, on a backstop, essentially, that will help keep those yields in check. Work is very much at the early stages, we've been told, with people thinking about what exactly such a program should look like. Presumably, of course, that will involve bond purchases of some form. But we'll have to see. And what's also not clear is whether they will actually go ahead and present the program, essentially put it on, in the window for everyone to see, or whether they will keep it in their drawer for the time when it's actually needed, or to be deployed then.
Okay, so we shouldn't expect any clarity on this when the ECB delivers its next decision less than a week from now, Jana?
It's very unlikely, I would say. The ECB said that any new policy decisions will be happening in June when new forecasts are available. And from what we hear is that they will use the meeting next week to really look at the situation in the economy, look at what's happening to inflation, what's happening in financial markets, and to use that meeting to discuss and basically position themselves to what will come at the June meeting. So I would say it's quite unlikely for us to hear any more details about that tool next week. Although, of course, you never know what's happening between now and then. So there is a small chance that they might shed some more light on it.